Good afternoon everyone, how are you doing? If you can hear my voice and see my screen, please can you type Y? Good job. So here we are, Friday the 13th. No disasters so far, both in trading and otherwise, but normally a suspicious day. There's some spooky music for you going in the room. Lucky for some, perhaps. Okay, so let's have a look at what's been going on. Yesterday, a slightly different day to what we've been having the week after the non-farms disaster on Friday, in that we found a bit of support, we found a bit of a bounce. So here I'm highlighting my E-mini S&P chart, the more longer term, the 60-minute chart, and what you can see clearly is obviously I can't speak any louder, I'm almost shouting, I'm afraid. What you can see is the markets coming off throughout the start of the week heavily, obviously, and yesterday we came off further still on initial jobless claims. A bad figure on the face of it, okay. What was out, so we're expecting on the headline initial jobless claims 460k, the range was 460 to 470k. It actually came out as 484k, so a bit of a disaster on that jobless front, and you can see obviously the market's reacting very heavily with that further push to the downside. What happened after that? Well, on further thought, the figures were digested in a bit more detail, and a partial offset to the negative data. Continuing claims fell 118,000 for the data in July the 31st week, which meant that the 4-week average fell 64,000 to 4.519 million. Okay, these numbers do not look good, but do reflect the kind of expiration of benefits as the unemployed simply fall out of the insured labour pool. And so there was a slight silver lining to this rather gloomy cloud of employment data. That's what gave us a push back up to this level that really came in play not only throughout the morning session but also into the evening session of 1084.75. And in fact we were all in it together as we went and hit this level for the 5th or 6th time for that day, just for a very strong technical reaction again. So the market's moving very technically towards the end of last night's session. So what's happened since then? Well, it's been a very data heavy morning, specifically from the Eurozone. Let me go on a shorter term chart. You can see first of all though, throughout the morning session, the grind higher in the E-mini S&P. Let's have a look at the DAX, and this really sums up the problem with European and specifically German-led data. Okay, so GDP figures, and the German was 2.2 versus expected 1.3%, an absolute colossal beat for the Germans, okay. Fantastic figures, and in fact this was the best German data in terms of the fastest growing GDP data for 2 decades, okay, spurring speculation that Europe's recovery is gaining momentum. Fantastic German number. What did we get? Well, the DAX gapped up on the open. The data came out first thing here, and ever since that data came out, look what happened to the DAX. Unsurprising, corrupt German data as we normally see, and the Euro and other stocks having a similar kind of reaction. I don't know how to get inside the inner circle of who gets the German data first, but I want an invitation. Let's have a look at the E-mini S&P then. Okay, so our entry short, looking for the morning just on the, just before that German data came out. Obviously the E-mini S&P following the European index futures, moving to the upside, and since then it's just heavy on good European data. France, their Q2 GDP also beat 0.6 versus an estimated 0.5. All this GDP data coming out from the Eurozone, as far as I'm concerned, and my European views I hope are well known in this room, is that it doesn't work, because you've just got further divergence between the individual nations of the Eurozone who currently have the same monetary policy. This morning, Greek yield premium to bonds are at 800 basis points. This is for the first time in June. Yesterday, Greece data was a disaster. We had a minus 1.5 Q-on-Q GDP. Their economy is still shrinking, and some say will still shrink until well into 2011. How can you have the same policy for a German economy that is booming more than it has for 2 decades, although to be fair, from a very low growth rate, but still absolutely booming, and then you've got a country like Greece whose economy is shrinking. I mentioned France, and their data is okay. I mean, they can benefit from the fact that their consumer price index means that the notional French franc is stable against the euro in real terms, very unlike the Greek drachma, which in real terms is causing a lack of competition in terms of the rest of the Eurozone countries. So the French surviving, but I don't think for now that's enough to stop chatter in the markets that they're going to be grouped very shortly with the other southern European states in terms of quality of their sovereign debt. So on the face of it, very good German figures, very good European data, but I think, in my opinion, that's as good as it gets for the European Union. That's the highlight, and from here on it's downhill, and we're going to see further losses in the euro throughout the whole month of August. Look at this move in the euro this morning on the back of that fantastic German economic data. I think that paints a picture for itself. Whilst I've got the euro up, what's our strategy for today? Well, obviously short. I'm looking for 128.66. I don't know if that's too punchy at the moment. We've got the pivot just below at 128.47. Over the last couple of days, this has been a crucial level, 127.77. Let's have a look at that on a slightly more long-term chart. Perhaps you can see why. Look at that level coming into play here, an absolute perfect reaction to that key support. So let's see what the euro does. Let's see what happens with the single currency as we get down to that level. Let me see if I can go even a bit further. I'll just remove my pivot points. You can see that level coming in there, and again being resistance in July, but since then being broken just throughout the month of July. But certainly a very significant level for today, guys, so keep your eye on that, and I think if that breaks, and breaks with speed, then you will have a reaction across other risk assets. Although we want a short entry on the euro, I know Piers has just sent you our daily strategy report. The overall strategy is neutral. The correlation between the euro and risk investments has been a little bit haphazard, especially on the timing and the timing of the entry and exit points over the last couple of days, so do be careful with that one. Okay, what about oil? I just pull up my 15-minute chart. Oil, we're looking for a short entry, 77.23. Oh, my screen just blanked. Not too far away from R1. Stop of 77.95 and the first target 75.53, I should say. Still a very bearish outlook on oil as these concerns on the economy, concerns on economic growth come into play. If you have a look at it on a daily chart, you can see that drop. Again, I'll remove my pivot points. That drop, it's pretty punchy in the last few days, and that's exasperated by those Chinese commodity import data that we had this weekend as well as last week. So a bearish outlook for oil also, and below this level of 75.53, 75.51, there's quite a large gap really going down to the 72s level. You know, we think in the long run oil will stay within the range of $70 to $80. It'll be oscillating within this range perhaps for the rest of the year, notwithstanding overly negative economic news, but perhaps to the lower side of that range. And for the E-mini, well, what are we looking at? Again, an entry short, notwithstanding a positive reaction to this data coming out. We've got a lot of data today, guys. So 130 consumer price index, 130 retail sales. Slightly later on, we've got University of Michigan, and at 3 o'clock US business inventories.